This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week, welcome to Monday. I think this week is going to be pretty crazy, to be honest with you, and then next week we got some rate cuts. So today we're going to jump around a little bit, but I do want to show you a couple of interesting things pertaining to the cycles and also a bunch of nods to the Camel Crew that continue to stay on top of these markets, right? First of all, the 10-year bond yield is selling off, okay? But as the Camel Crew know, right, this is what telling it to the bond market looks like. There's a reason we say tell that to the bond market. Many have their opinions, many have their calls, predictions, and forecasts. We don't need any of them, okay? We simply say tell that to the bond market. It's the bond market in aggregate that determines rates, okay? Not anyone else. No one else's opinions mean anything, okay? So once again, I sit here and say, what does a chart of truth look like? It looks like this. Why? Because once again, tell that to the bond market, okay? That is how we are so able to always predict the rate cuts or lack thereof. It's because all we need to do is look at the chart of truth. They call this thing the chart of truth for a reason, by the way. In addition to that, something else we do better than almost everyone is call inflation. And on Thursday, we have got CPI data for the USA somewhere in this neighborhood right here. And again, if you're part of the Camel Crew, then you know exactly what to expect, right? You know this is probably going to be below forecast, but if not, then it's going to be the final week before we start to head down in that disinflationary trend and continue on our way to reaching a short period of asset price deflation next year. And that is why we are finally going to see rate cuts show up again, because we say tell that to the bond market. So this week we got the CPI data. Next week we're going to see a rate cut. And the question is no longer will we see a rate cut or not? The question is now, is it going to be 25 bips or 50 bips? And again, if you're part of the Camel Crew, then you know how to use these percentages to figure out exactly which one of these is on the table. I'm seeing plenty of people calling for 50 bips. Not going to happen, right? Not with a 9.9% probability. Why? Because again, it's the bond market in aggregate that determines the rates, right? What is this? This is calculated based on the bond market futures. And since we know we can tell that to the bond market, again, all of these opinions we see online, I'm talking everything from speculation to outright ridiculousness, such as things like this, right? Total jobs report showing weakness from the labour market, and at the same time we're seeing signs that inflation could start to re-accelerate. What are you talking about? It couldn't be more 180-degree flat wrong, right? It puts us in a stagflation environment. What are you talking about? Do you see the ridiculousness with which the market is operating at the moment? And look at this, which gives the Fed clear reason to hold rates where they are, okay? This is exactly why we say tell that to the bond market, okay? Because stuff like this proliferates all over the internet, and it's simply from people that do not have a flipping clue how to look at a bond market chart, okay? So the Camel Crew is going to keep doing what we're doing. I'm not trying to cook people this early in the morning, and it also feeds into this idea right here, okay? We got Henrik talking about the Fed apparently waking up. He keeps being asked, why don't they say what you see? He says he has no idea, right? Because he's apparently smarter than the Fed. Come on, Henrik. It is not the Fed is incompetent, okay? It is not that Henrik is some omniscient, omnipotent, omnipresent entity that is way smarter than the Fed. No. It's that Henrik does not want to go pointing the finger like I am happy to do and say that this thing is a controlled demolition, okay? Once again, the Camel Crew is well on top of this. Do you really think these people are smarter than the Fed, or do you think they are engineering this thing with precision? And of course, the answer is they are engineering this thing with precision because they need to tear down the system so they can reset it and boot the CBDCs. That's how we're already seeing them do this in plain sight. Okay, this is not speculation. This is not conjecture. Okay, you are either sitting here watching it happen with eyes open, or you have your head in the sand with your bum in the air, waiting for some opportunistic guy to walk past and fulfill your wildest dreams. Okay, welcome to the week. Welcome to Monday. This week and next week is going to be absolutely insane. And that's because as per the weekend's deep dive, okay, we're already in recession. I had a bunch of people challenge me on this. A bunch of people said there's no way we're already in recession and blah, 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 blah. Okay, I continue to make the case that the NBER will go back and paint their grey recessionary bars, likely starting from the middle of this year forward 12 months to the middle of next year. Lots of people say, how on earth is this going to happen, right? We're already on month 9, 3/4 of the way through. But remember what happened during the GFC, okay? This was the great financial crisis. The NBER, which is the National Bureau of Economic Research, they are the ones in charge of officially declaring the recession. They came out here, okay, December 2008, and said, oh, we're going to officially declare a recession now. And they painted the recessionary bar 12 months back in time, okay? They went back here in December of 2008 and added a 12-month recession bar dating back to December 2007. By then, the market had already crashed 45-ish% from top to bottom, okay? It was practically over when they actually declared the recession. And so I am making the case at the hard right edge, we are going to see them do the exact same thing. They are going to come here as of probably the middle of next year, sometime around June or July, and they are going to paint a 12-month recessionary bar, something like this, okay, and they're going to say, there you go, there's the recession. But of course, by then, we're going to be almost at the 4-year cycle low for the S&P. The damage is already going to have been done, and we're going to have made off like bandits because we are not going to be dogmatic and try to second guess the 4-year cycle lows. So understand this, okay? When we can see we're already in a recession, when people like David Hunter, who was a top performing pension manager for the best part of 2 decades, has something like 53 years of experience in markets, when he is saying we're probably already in a recession as well, it's time to sit up and pay attention, okay? It is time to sit up in your chair and look around you and start to be ready to head for the exit. Now, that doesn't mean that we're not long and strong, because we are, as anybody that's been following this channel knows. That doesn't mean we're not cheering on much higher prices, because again, we are. But it also means we have to start to be aware that we can't just keep saying long and strong continue to push, okay, as we head towards the end of these 4-year cycles. And so that's the stock market and all of my crazy Crackpipe Monday ranting out the way. What does this mean for Bitcoin? Because I know most of you only care about Bitcoin. Well, I actually think this is probably what's happening. I think we're in the middle of working out a daily or a weekly cycle low. Could it take a couple more weeks? Yes. Have we got a couple accounts to work through? Yes. Okay, we'll figure this out though, as we always do. This is not the first time we've had to run a couple accounts, but sometime in the next couple of weeks, we're going to have an answer. We're going to be back to clarity. And I really think it's going to end up being something like this, okay? Now, if this repeats, we push up to, I don't know, north of 150K by the end of the year. And then it's the easiest thing in the world and simultaneously the hardest thing in the world, okay? Because we've all had the map. It's the easiest thing in the world to say, well, there we go. We got to the end of Q4, time to start selling the bags and head for that 4-year cycle low. But it's simultaneously the hardest thing in the world because the human mind is wired to fail in trading. The human mind will perpetually invent ideas, narratives, excuses, and reasons as to why they cannot jeet the bags into the top of the 4-year cycle. And instead, why this time's got to be different. 60% of the market is currently betting against the most consistent cycle of any asset class on any time frame I have ever seen. Good, okay? Because it's one thing to say you're going to get here and sell. It's another thing to actually do it. And the market is showing you this, okay? With about 47% of people telling you that they expect this thing to top in Q4 of 2025. Meanwhile, the entire rest of the market is out here telling us that there's either no more 4-year cycle, no more bear markets, or we're going to run all the way into 2026, right? And whilst there's a non-zero probability, again, why would you bet against the most consistent cycle the world has ever seen? And it's not just the kind of retail trader and the CT LARPs, okay? It's also the people like Plan B. I mean, how many followers does this guy have? 2.1 million followers. And this guy is out here saying that 2 out of 3 people think 2026 will be a bear market and where Bitcoin will crash. But what if it just keeps doubling every year, okay? We'll be at 160K by the end of this year. And then why have a bear market? Why have another 4-year cycle low when we could just double again to 320 and then double again to 640 in 2027? Wouldn't surprise you. I mean, if you want to bet against the most consistent cycle of any asset class in history, be my guest, okay? But I'm not going to be doing that. That's not the smart bet right now. And I really think we can see this in the timing when we come off of the 4-year cycles and start to pay attention to the weekly cycles for the likes of gold and Bitcoin, okay? Historically, I've shown this plenty of times before. We get gold move up and then it consolidates for a bit. It tops for its weekly cycle and that enables Bitcoin to run thereafter. We got the same thing here. Gold moves up, consolidates after a weekly cycle top, giving Bitcoin the space to run. And right now we have got gold moving into a weekly cycle top. Okay, this should not be a surprise to you because I've been talking about this every single video, every single day. And I've been saying all of the assets pertaining to gold, silver, and the miners that we accumulated at that major weekly cycle low at the start of the year are getting ready to be dumped into the top of this weekly cycle high. And guess what that aligns with? In fact, for clarity, okay, here is the gold chart. Let me turn on my indicator, okay? We have this current weekly cycle consolidated. We are now on our way to a big blow off top, left translated weekly cycle, which would also be the top for the major 4-year cycle, okay, or the half cycle in the 8-year cycle. And look, this thing could top as early as the end of October. Now, what does that perfectly align with for Bitcoin? You guessed it, the upcoming weekly cycle low which should in theory be the final weekly cycle low before we have to move to the ultimate top in the 4-year cycle and start to head for those major 4-year cycle lows thereafter. So the rotation trade, in my opinion, is set up. We are set up here to dump all of the gold, silver, and the mining positions into October, let's say late October, and by then we should have found a major weekly cycle low for Bitcoin, getting ready to see this gold chart down the bottom top for its major 4-year cycle as Bitcoin makes its final run to the top and tops for its major 4-year cycle, and then they both head down to those major lows that will be catalyzed by record QE late 2026. Absolutely wild times to be alive. For anyone looking for trade setups, I know I've spent ages going through with the level 3 members, so the members are fully caught up here, but to give you a brief outline, okay, we're looking for a daily cycle low to add in the stock market. We're looking for the VIX to continue to compress down sub 12, and then it is time to get long like we have never been long before. For gold, as I said a million times, we're looking for that final leg up, okay, to use GDX because that's got a timing arc in it. Okay, look, here we go. We're entering the timing window as of today. Okay, as of this week. So expect us to probably blow through this in terms of price, but in terms of time, somewhere in there is going to be the sweet spot. I would speculate probably around, look, late October, right? Again, aligns with that gold fractal. Why? Because how sustainable is this fourth angle? Obviously not very, okay? So a few more candles up here to late October, break down, sell the top. That also is the weekly cycle top, head for that 4-year cycle low, and then by then it is Bitcoin's turn to put in its third and fourth angle, okay? And then all of this thing is going to be over in the blink of an eye. Again, we're going to be making off like bandits, and everyone else is going to be sat here scratching their behinds going, what about no more 4-year cycles, bro? BlackRock's never going to allow a drawdown in an ETF, right? Okay, lock in. It is time to get super serious about the completion of this cycle. We are not giving back the insane gains that we have made this cycle. We're going to lock them down, secure the bag, secure the next level of our financial lives, and move on. Bitcoin, we are finally going to get an answer this week. It looks a little bit like that's the daily cycle low, doesn't it? So fine, positioned if that's true, and we'll position if that's not true. For now, again, we're just still in that process of letting this thing work itself out. There's plenty of videos over the past 2 weeks showing the 2 possible count ideas, and again, we're just going to sit back and let this thing reveal itself. Meanwhile, tell that to the bond market, right? Again, tell it to the bond market. Anytime anyone's got any opinion about rates, okay, give them double middle fingers and tell them to go and tell it to the bond market. Their opinion does not mean anything. So that's it from me. Welcome to the week. Welcome to Monday. I'll be back tomorrow. Until then, cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel